Hey everyone, this week we continue our series on home ownership. We're helping you navigate those big questions around property, like how much do I need to save for a deposit? How do I find a good home in this market? And how do I actually finance that home with a home loan? And how do I not lose my head in the process? So, to help answer all these questions, we're chatting to mortgage brokers, financial advisors, and buyers advocates. So, if that's you, track with us on this journey. It's going to be fun. I'm Lachlan Nicolson, and you're listening to Mind Over Money. You're listening to Mind Over Money. So last week, we talked about the First Home Super Saver scheme and how you can use it to boost your home deposit savings. So if you haven't listened to that one, go back and check that out. That was episode 13. This week, we're focusing on getting your finances sorted to secure a home loan. And to help us navigate that, I'm joined by Archie Franz. G'day, Archie.
G'day, Lachlan. Great to be back.
Yeah. How was your holiday?
Mate, it was a great time. Yeah. We went north where it was nice and warm because it's currently winter here. So, yeah, it was really good to get into some warm weather.
Oh, that's great. Well, today we are chatting about home loans, and you're a mortgage broker. So you know a lot about this. You've guided hundreds of people through getting a home loan. What's the overall process of getting a home loan? I think a lot of people still don't know. You know, they might have read a few things online, but they don't realize how complex it can actually be to get a home loan. And there are lots of different steps and things we can do to prepare even before we go to actually apply for the loan. So what are some of those steps that you see that can really be helpful for people to do it well?
So probably the first thing to say here is that when we do this podcast and we're talking about buying a house, we do mean apartments and duplexes as well.
Yeah.
So we're not just meaning a house, we're just using an overall way of saying things. Yeah, look, you got to get some initial things done first, which are really important, which is number one is get to know your finances. And that means what's your income, what's your expenses, what sort of loans do you have? Do you have credit cards? Do you have buy now, pay later? Do you have no interest purchases? Because all of these things really impact your ability to qualify for a home loan. And a big thing here is don't assume that because you pay rent or you earn a good income that you automatically qualify for a home loan, because you don't. And that's often where we get caught. We think that we automatically, because of our circumstances, that we should just qualify easily for a home loan. And I think we need to understand that one of the hardest loans for us to get is a home loan, and because we have to meet all the rules for the actual home loan product. We have to meet the rules for the bank or the financial institution that we're going through. We have to meet the rules that APRA require, because APRA is in charge of all this as a government body. And then there's just rules. So, and so, yeah, just don't think that you just qualify because of your situation. Because there's so many rules involved.
So you just can't put on a suit and rock up to the bank, look good and go, where's my loan?
Yeah. Once upon a time you did. You definitely had to turn up to the bank wearing a suit. Otherwise the manager would have thrown you out. But yeah, we don't have that anymore.
It's a bit different. So you can look good in the suit, but if you're just drowning in debt, you might not get the loan.
Yeah. And look, don't assume anything. Like this is part of the initial steps. Don't assume anything because sometimes we assume that we wouldn't qualify for a loan, and don't even assume that. Yeah.
Yeah. I've had this lately from friends texting me going, oh, we can't get a loan because of this, and this reason. I'm going, whoa, where'd you get that from? Like, it's almost like they went to a particular bank and that bank said no, but then they don't realize that there are actually lots of banks with lots of different products, and there actually may be a loan that's most likely a loan that is suitable for their situation.
And just be prepared to change your finances. So this is a crucial area in around getting a home loan is be prepared to change. And so that can mean getting rid of credit cards or getting rid of car loans, buy now, pay later schemes, no interest purchases. Sometimes you got to have to do some consolidation and bring some things together because it's all about qualifying for a loan. And and so you got to make changes to do that. So again,
Yeah.
don't make assumptions, that, oh, I can keep my credit cards or I can do this or do that and the bank will accept it. No, the bank and all the other rules are what you've got to meet and it has nothing to do with what you think. and that's often where we get
Yeah.
caught is what we're thinking or what we've heard and it doesn't line up with those rules.
Another thing that people have a lot of assumptions around is credit score. And I think sometimes maybe this gets put too much emphasis on. But like, how important is credit score in the mix of getting a home loan?
So APRA's made it a requirement now that banks have to check your credit score, and it never used to be. So some banks didn't even check the credit score. They were more interested in what you're doing now than what happened in the past. But now APRA has put that requirement in there that, you need to have a good credit score.
Okay.
And so the best thing is get a credit score check done with a mortgage broker because a mortgage broker can tell you whether that credit score is, because we can look at a score and we just don't even know what we're looking at. And we can go, oh, well, that's it. I can't get a loan. But once your mortgage broker has a look at it, because they're qualified to look at it, they can actually tell you, oh, yeah, that credit score, yeah, we're going to have to fix a few things. Or look, that credit score is perfectly fine. So again, it's, don't assume, just get some help.
Yeah, okay. So if we do rush these initial steps and we fail, the home loan doesn't go through, what happens? Do we go back to the drawing board?
Look, it'll just make it harder to get a suitable loan. And I think that's the way we want to talk about this. Like we want to qualify for a suitable loan, like a loan that's suitable for our circumstances. So, if we don't get our ducks in a row and we end up applying to a bank and then the bank knocks us back, it's just going to make it harder. So you're just going to have to do a bit more work. That's all. And honestly, when it comes to getting a home loan, it does take work. There's no easy way. Some people say it was just, it was such a breeze. Everything was so easy. And I think they're telling you a furphy because there's a lot of work in getting a home loan. And the government's made it that way. Like I was doing home loans 15 years ago, and honestly, it was easy to get a home loan 15 years ago. I could fill out an application with a client and get it done in 30 minutes and have an answer in 24 hours. But with all the requirements that are there now, it's, days or weeks, even sometimes months before we can get a home loan through. And
wow.
But that's just how it is. And so, people can feel like they've failed and want to give up. Well, I always say, look, don't give up. Let's just keep working on this thing because we can all qualify and we can all get a home loan. It's just that we need to put some work in.
Okay. So they're the initial steps. So getting ready, getting prepared.
Yep.
And then what would be your steps from here on? So that's the starting step. What would be step one from here moving forward?
So decide on a weekly budget and stick to it for 3 months.
Okay.
Because the banks are going to look at your expenses over a 3-month period. And sometimes they'll go up to 6 months.
Right.
But they want to see how much money you're spending and what you're living on. And so you really do need to show, like, to get a good product and to get a good, suitable home loan, you need to show the financial institution that you're you qualify, that you're a good person, to suit their home loan. So basically what the bank's doing is assessing you as to whether they want to give you a home loan or not.
Yeah, okay.
And they're assessing what interest rate they're going to charge you. They're assessing what fees they're going to charge you. So, and that's what I said before about don't assume anything because, the banks are the one selling the product and they're the one who's still got to make that choice of whether they're going to give you that product or not.
Yeah, okay.
So the best thing is, get in, get a budget, stick to it. Because if you spend everything that's coming in, that's not going to be taken well by a bank, by a financial institution.
Yeah.
And so, you can still qualify for a loan, but is it going to be, the most suitable loan for your circumstances? That's the problem that you run into.
Okay. So stick to the budget, a good quarter. Don't just cancel your Stan and Netflix the weekend before the loan. you gotta show that you can stick to a budget for a decent amount of time, and really create that. So is it margin they're looking for? That gap between what you spend, what you make. They can see that you've got a buffer. They can see that you're saving. Okay. Yeah, and with interest rates going up as well, they're probably looking for an even bigger buffer, right? Because the assessment rates are going to be going up.
Yes, that's right. Which is automatically calculated in their assessment calculators. But at the same time, we need to remember that financial institutions are taking into account the whole circumstances of what's happening in the housing market, what's happening in the economy, what's happening with jobs. And so they're not just looking at credit scores and, what your weekly budget is. They're looking at the big picture as well. And they're assessing, even assessing your occupation, because that part plays a very important part as well.
Right.
So the next step, number 2, then is really assessing your borrowing capacity.
Yep.
So with our borrowing capacity, that's looking at what our income is, what our expenses are, what our circumstances are. Do we have a family? How many dependents do we have? And that if you got a good calculator, a good loan calculator, then you can actually start to understand how your living expenses will affect your borrowing capacity. And so if you're going out to buy, a house worth, say, $800,000, and you're going to need to borrow, say, 80% of that, and so basically about 640,000, then the loan calculator can actually help you to assess, can you actually borrow that 640,000, and will you have a buffer? Because this is where we start looking at how much we're borrowing against our income, because it's our income that's going to pay off the home loan. And so we can say, well, look, if I'm going to borrow 3 times my yearly income's 100,000, and I borrow 300,000, I can generally pay that off pretty quickly, within 10 years. But if I have to go out to 6 times my income, it's probably going to take at least 25 years to pay off that home loan, because I'm taking a bigger chunk of my income to actually pay that home loan. So that's where we can sort of get an idea of how much we should be borrowing, always keeping in mind that we want financial freedom. The whole reason we want a home is to give us financial freedom. So the amount of money that we borrow is really important to actually making sure that we actually achieve that goal of financial freedom.
Yeah. So it sounds like overall, from step 1 and step 2, having a bigger buffer is better, just because things are changing in the market, property is changing, and so the bigger the buffer, the better you're able to service that loan and pay down the loan.
Yeah, what's important here is what's going to happen after you get the home loan. So after you get the home loan, if you start having children and you drop from 2 incomes back to 1 income, that's going to have a big impact. If you borrowed at 6 times your capacity and then you cut back your income, that's going to be really hard to service and look after. So what happens after you take out the home loan is way more critical than when you take out the home loan. So if you're going to have some major changes in your circumstances, that can have a really big impact on you. And also, what sort of borrowing levels you take on board after you take out the home loan is also very important. So if you suddenly start borrowing money, you got your home loan, you think, oh, I'm all sweet now, going to get into this. But then you start borrowing for cars and holidays and furniture and stuff, suddenly that can have a really big impact as well.
Yeah. And you might be seeing a nice house, but you're really stressed out and it's not worth it.
Yeah. Yep. Yeah. So this step is really important. Like, what we're doing at the beginning is setting some boundaries around how we're going to purchase a home, and what those boundaries are around our finances, so that we can keep our financial freedom.
Okay, so we've created a budget at step 1. We've used a loan calculator and talked to our broker about assessing our proper borrowing capacity and really thinking about how much we actually want to borrow. Thinking about that, not just to buy the home, but also what's going to happen after that home. We have to service that loan, and what's our stress levels going to be around servicing that loan. What's step 3?
Step 3 is, I call this one the here comes more pain.
Okay, great. Okay, walk us through that.
The reason I say that is that there's more pain because you've worked through your financial situation, and you may not like what you're working through. Most people don't, but now you're starting to look at houses, and then you see, hang on, these houses, are going to cost a lot more than what I've worked out I want to spend. Like you start seeing things and you go, oh, I really like that house, or I really want that house, because you're now looking at a big market of houses, and
Mm.
and so now you've got to work through the emotions of how to what sort of house to purchase. How should it look to fit within what you've just done with your finances.
Yeah, we had this when we first got our loan with the finances ready to go. We started looking, and we just couldn't find a home that we initially wanted. And actually the home came about when we just relaxed, and we just allowed ourselves to go, you know what, we just need to open our mind a little bit here. And then we actually found something that was different to what we first thought, but it was still suitable, and we're really happy now that we've moved in. We cleared out some things, changed a few things, and now we love it. And so I
Yep.
think, yeah, just being flexible is the key.
Look at one of the best things here is make a list of all the things that are important to you, and right at the top of the list, put financial freedom. Make that one of your top priorities,
Yeah,
and
that's a good
then
one.
work through what your other priorities are, and then find out what things you can let go of. We've got to realize a house is deteriorating. No house is getting better. It's actually deteriorating over time. The kitchen's deteriorating, the
Mm,
bathroom's deteriorating, the outside of it's deteriorating. So over time, we're going to have to do work on our house. So we could buy a house now that doesn't have the ideal kitchen, doesn't have the ideal bathroom or entertainment area, but maybe in 5 or 10 years, we're able to put in the kitchen and the bathroom and the entertainment area that we really want.
mm.
So, we've got to be able to work through a bit of a process of prioritizing what's important, and, get the top priorities first, and then, let the other stuff happen over time.
Yeah, I love that. Okay, what's the next step from here?
So now we need to assess the cost of the loan. So, what sort of deposit are we going to need? What's our what's our borrowing amount? These things are going to start to really determine what the actual cost of the loan will be. So there's quite a few different costs that are going to come into play, such as mortgage insurance, the interest rate that we're going to get charged, assessment fees that we're going to get charged, application fees, even valuation fees. So there's lots of different fees that can come into play.
Rules, fees.
Yep.
I was shocked,
And
when I first saw the fees on our first place. I was like, whoa, wait, all this and that and that and that, and then the solicitors, and then wow, this is
yep.
not what the commercial said. It would be easy. It's like rules, fees.
Yep. Yeah.
Oh,
look, just remember the internet is a marketing tool for businesses to sell their products. And so is the ads that you get on TV and other places, and so, if we just jump on the internet and start looking at interest rates and put our focus on that, we're not going to get a true idea or evaluation, of our situation, and what fees we could be up for. And so, we can end up finding a loan online and going, oh, this loan would be fantastic for me. But by the time you get to the end of the process, you've got all these fees that have been lumped on you that you didn't know about. And, now you're actually paying a much higher interest rate overall on the loan because of all those fees that are lumped on. And so this is where there's only certain qualified people in Australia that can actually provide you with advice and information around fees and charges, around loans and around your situation.
I'm not surprised. It's a minefield.
Yeah. Yep. And so you need that qualified person, which is a mortgage broker. So, because if you go straight to the financial institution to get a loan, that financial institution only has an obligation to tell you what their fees could be, but then they don't have any obligation to compare themselves with anyone else. And they don't have any obligation, they can just say to you, look, put in an application and we'll assess it, and then we can tell you what things are going to be. Whereas when you go to a qualified mortgage broker, they're able to actually collect information off you and then start to help you work through what are the costs going to be, what's going to be involved in taking on a home loan for your situation. And that's the only way you can get those true costs. and they will find a way to get you into a product that's really suitable for you and minimize those costs.
And we're focusing here more on first home buyers, but even for people when they go to refinance, you see the billboards and the ads on TV about get $2,000 when you refinance. Well, we just realized that $2,000 just goes into the changeover fees between the two loans. so really the money that there's cash splashing around to switch loans is just going to the fees to actually change the loan. So you don't actually get the money.
That's right. Yeah. Yeah. Right at the moment, there's some big offers out there at the moment, and it's to get you to make an emotional decision and say, look, this is only for a limited time. There's sales 101 coming in. Here's a limited time offer. Change across to us, and we'll give you this this cash back, and so you can look at it and think, oh, this is fantastic, but you haven't actually assessed what that actual loan is going to cost you.
Yeah,
and so the only person that's going to be able to do that for you is your mortgage broker.
Yeah. Okay, so we've done all that. We've assessed the cost of the loan. So we work with our broker. We should be ready by now, right? We're nearly there.
This is step 5. Yeah. Step 5 is really working with your broker to know that you're ready. You're getting to that point now where you're pretty much coming up that you could go out and put in an offer on a house and sign a contract to purchase a house.
This is where it's peak emotion, right?
Oh, yeah.
Thinking back to when we bought our home and your son Adam was doing it alone for us, mortgage broker. And I think Adam was more of a counselor and psychologist than at that point than he was a mortgage broker. Just keeping our heads cool as we're starting to negotiate with the owners of this home. And it can get pretty heated at this point when you feel like you're so close, right? And you're like, oh, I've done all this work. Can't I just can't we just sign the dotted line and get this over
and
and
look,
done with?
There's so much going on, and there's so much that's still up in the air. There's no certainty at this point. You haven't got a certainty of a loan. You haven't got the certainty of buying a house. You haven't got any certainty at this point. So it is quite emotional.
Yeah.
Yep.
And then, so what happens from there on?
Well, before you sign a contract, so you might be starting to look and go, oh, I found a place, this is the place I'm after. But you need to bring in some legal support now, because before you sign any contract, you need to make sure you've got some legal support, some legal advice to help you understand what you're actually signing. And also this can be another great place to bring in a buyer's advocate, because there can be a real emotional roller coaster here. And I see this over and over with clients, that this is the extremely emotional time and a real roller coaster ride. And so it could be a time to bring in a buyer's advocate who will actually help you buy a house and remove some of that emotion and help you keep you calm and, keep you in a good place. And of course, we're talking costs again. We're talking costs of legal advice. We're talking costs for an advocate, buyer's advocate. But this is where you've got to work these things through.
Yeah. And a good solicitor or conveyancer at this point, they'll bring a whole set of questions as well. I remember our conveyancer, just, Lachlan, have you done this check? Have you done that check? Have you called the council? Have you, and I was like, no, I haven't done any of that. And then she said, okay, look, I'll go off and do these things and come back with these checks. And I hadn't thought about all this stuff, right? Have you put this in the contract? Have you checked this off with council? Have you got a proof? Have you got a certificate of currency on this? So the conveyancer, if they're a good conveyancer, they'll get you asking the right questions and actually help you find the answers to those before you sign legal liability and ownership of that property. You sometimes you don't even know what you're inheriting, and I wouldn't rely on the agents to tell you either.
Yeah, definitely not. Okay.
Look at that great window there. Just step over that gas pipe. We won't talk about that. And look at these double doors.
Okay, we're just having a bit of fun with you real estate agents. We love you. We know you play a very important role, but but still, it is a buyer's beware. Like when it comes to anything in life, it's buyer beware. So, and you need your support. So the real estate agent is there to sell the house. And so that's their job. And they'll answer questions that you can ask them. But it's really up to you to make sure that you're doing your due diligence to ensure that you're buying what you think is a fair income property. But you got to make sure that the legal side of things is in place there.
Okay, so we've looked at that now. What happens now?
So you found your property. now it's the legal contracts have to be put in place to actually purchase the property, and all the legal checks need to be done to ensure that you're what you're buying is fair income. This is where it can get complex. If you're going to auction on a property, you have to have everything done before you go to auction. So you have to have all your legal stuff done before you go to auction, your building and pest inspections done. You have to have your finance ready to go. So, going to auction, because you've got to buy the property outright, with no clauses. So the contract has no clauses. You're just buying that property. And if you fail, they can charge you up to 10% of the value of the property.
Yikes.
So it can really cost you a lot. And if you're not going to auction, that's where you get a bit more time, and you can, use your legal advisors to help you get those contracts set up appropriately so that you got adequate time to do all your checks and balances, do all your due diligence that's needed there. And this is where I say it's so important to pay fees. So pay fees to get advice, because if you don't pay fees to get advice, then you're going to pay in another way. And so I see people trying to get really cheap solicitors or conveyancing. I see people, trying to, dodge the building inspection and stuff because they just go, I don't want to pay that fee, So then you're buying stuff, you're now responsible for it. So, therefore, down the track, if it costs you another $100,000 because you didn't get the checks and balances done properly, well, you're up for the $100,000. And, and it might have only cost you $5,000 right at the beginning to know that everything was okay. So it's well worthwhile paying the fees. Don't skimp on them.
Yeah, that's the last thing you want to be holding on to a property that you later on you find out, it got pest problems, it's got structural problems, it's got, all these issues. And the next person's going to find that out too if you try and flog the place off on the market. So you really are stuck with it. So, do your checks and balances. Okay, so that was step 7. We must be getting near a contract here. Come on. Are we there yet?
Well, step 7 is really that, you've signed a purchase contract now.
Right.
And so now the clock is ticking, and everything has to go in place to get ready for settlement.
Okay.
And so that means, building and pest has to be done, and, legal checks have to be done. And of course, finance application has to be submitted and finance approved.
Okay. So this is the race to the finish line. We're getting all the things now ready for that unconditional.
Yes. Yeah. And again, we have to be ready for change, because things are going to come back to us that we may not like. So we may get a bad building and pest report. So we've got to make a decision. What are we going to do? So we're going to have to get legal advice on what we do around that. It may be that the legal guys, come back and find out, hang on, there's an easement running through this thing. So in the future there could be complications with this property. There's all sorts of things that can pop up, and then the bank may come up with, oh, hang on, the valuation didn't come in good enough. You're going to have to cough up another X amount of dollars to be able to make this thing work. So you've got to be prepared for change again. So you sign the contract and you're all excited and thinking, yes, we've got our house. Yep, maybe not. There's still a process going on here.
Yeah, so going back to step 2, making sure you have that buffer in place, because, that's where things can change even in the process, right? Between step 2 and step 8, when it goes unconditional, the home valuation may drop in that period of time.
Yep.
Something can happen. So, everything's moving pieces of puzzles, right? Until it all sort of gets set in stone at the very last second. So we say this just to let you guys know, just be prepared. Everything's changing, and this is what we realized when we bought our first home was, wow, everything's just all over the place and your brain's trying to hold it together. And it's just so good having those, the mortgage broker, the solicitor, asking the right questions, knowing that people are working on it. Someone's following up with the bank, people are working together to make this thing fall into place. And and then it does. Again,
this is the difference between, dealing directly with a financial institution and having a broker, is that if you're dealing directly with a financial institution, you have to be the one following them up. And then you've got to be following up the legal guys. Then you've got to be following up, it can become overwhelming. This part of the whole process can become very overwhelming. But if you've got people doing the work for you, and you're working with those people, working with the mortgage broker, working with the legal guys. Like some people try and take on the legal stuff themselves, and I just go, that's nuts. Because there's just so much that has to happen, and there's just no way you can do it.
Yeah.
So just recognize, this part of the process. It might only be a 2-week period or a 3-week period, but it can be very stressful. And it could also lead to requirements to have the contract extended, and so that's quite stressful as well, because the legal guys have to be talking to whoever you're purchasing the property from. There has to be all this toing and froing, and everything's left to the last minute. I can tell you that now. And so at the last minute, you're still waiting to know whether things are happening or not happening. So be ready for that. and that's why I'm saying right at the beginning was that this all takes work. Getting a home, buying a home, it takes a lot of work. You've put in a lot of effort to get to where you are in your life, whether it's studies, apprenticeships, training at work, all the things that go on in life to get us to where we are. Well, just think about a home loan the same way. You need to put in the effort. To come out with a great result, it takes effort. And just be prepared to put in that effort and take the time to do things, and understand what's going on so that you can enjoy the process.
It is. It's a fun, scary, but rewarding process, and you want people in your corner there along the way. Okay, so we got the contract now, unconditional. Whew, breath of fresh air. We've got a move-in date, I guess, by that point.
Yep. Well, unconditional means the finance has been approved. The legal guys are happy. Building and pest is happy. Everything's ready to go now. And now we're preparing for settlement. So settlement might be 2 weeks or 6 weeks, depending on the contract. And so now all the preparation goes in place to make settlement happen. And settlement is where all the parties, the buyer and seller, complete their obligations. So the buyer's got to pay over the money, and the seller's got to give over the ownership. And if there's any other things in that contract that have to be fulfilled, then all those things have to be done. So sometimes we might find that part of the contract is some work needs to be done on the house. And so settlement can't take place until that work has been completed. And, I had a client recently who, when they were purchasing the house required roof repairs. And so settlement couldn't take place until those roof repairs were done.
Oh, good luck finding a roofer in this market.
Oh, they got done.
Okay, that's good.
They happened.
That's a miracle right there.
So it's all about settlement, and again, you're sort of left waiting, for things to happen. But one of the main things that you've got to do as the buyer is make sure that you put all the money that's required from your end goes to your solicitor conveyancer so that they can complete the settlement.
Yeah, there's this big, giant balance sheet on the last day, right?
Yeah, everything's got to be calculated by the solicitor conveyancer as to how much money you got to put in, how much money the bank's putting in, who's getting paid what, because there can be 3 or 4 parties that have to be paid out of all this money. So, it could be like the real estate agent's got to be paid, as well as the owner of the property's got to be paid, as well as there could be a mortgage, and so a bank's got to be paid out as well. And so, all of that's got to take place at settlement.
It's quite impressive. They calculate it down even with the rates, right? Down to the last kind of day, and they figure all this stuff out in the last second.
There's
bills and
so the solicitor's got to be paid, stamp duty's got to be paid. So all these things have to take place at settlement, or even sometimes just before settlement. And so it's you got to stay in tune with your legal advisor about making sure that the right money turns up at the right time.
Yeah. So don't go on a holiday just yet. Don't take out a car loan. Just
oh gosh,
hold your horses.
I've seen people do that. go on holidays right when everything's got to happen. It's a disaster. Yeah, don't do that.
Okay, so then that all settles. Okay, now we move in, right? And then is that the
Yep.
last? What's that? Step 9. We're up to step 9.
Yep. So this is where we've got to be careful with spending money on setting up the house,
Right.
because
Don't go gun ho.
yeah, we've got to go back to our original budget, our original priorities, and because it's too easy to go out and start shopping and do all this no interest loans and buy now, pay later, and to set up the house, and you can actually spend way too much money. So this is where we can get in trouble very quickly.
Throwing a dog in a jacuzzi.
Yeah, yeah. This is what happens after we get the home loan. And I've seen people run out and buy a new car at the same time, and you're just going, "Oh no, what are you doing?" Because it's just too much pressure on the finances and on your emotions, and yeah. So it's like move in, take your time, and stick to your budget, stick to your goals. What you prioritized, because that's what makes us happy. When we keep sticking to what we've set out that we're going to do and we stick to that, we're actually very happy.
Yeah, it's just the joy of the simple things. I remember we moved into our home and we ordered our couch, and then they said, "Oh, it'll be like about 12 weeks." So we just threw down the beanbag on the floor and rolled out a rug on the tile, and it was good. It was good fun, right? For the first couple of weeks, friends come around. We had the dining table there, so we just sit on the dining table and have a yarn, and crack open some beers and just enjoy having a half-empty house. I think people know, they understand. So yeah, don't be in a rush to fill everything. And you're more likely to fill it with stuff that you don't really want, or you're more likely to even just compromise on things and just get lots of, furniture in there that you end up replacing another year later. So take your time. Don't rush in. Just,
Yep.
think about your purchases.
Like, you've got to be prepared for unexpected costs when you own a home. Does the hot water system can go at any time. There could be problems with the solar system. There could be plumbing needs. Suddenly the toilet's backing up and you got to get a plumber in to fix the whole plumbing system, because some of these things can't be seen or known, but they are going to happen. And so you just need to be prepared for that, and and keep your budget working well. So that when those things do happen, because you own a house, you're up for repairs now, and and maintenance on that house. So you just got to be prepared for that.
And if you break a wall moving in, well, get some patch and off you go.
Oh yeah,
lots of trips to Bunnings. That's what I learned when
I've done that. I think I've broken a door once. Yeah, and look, there's there's also some low cost stuff that you can do with a home. Like beware of Bunnings though, because Bunnings can just suck your money.
Oh yeah, those trips add up.
If you go there every weekend. Yeah, if you go there every weekend after you move into your house, it's like, whoa, that's going to chew some dollars.
Yeah.
But if you set out a bit of a plan and have some fun, like I've always found painting a house, painting rooms and even just painting ceilings can really lift a house. Before you get into painting anything else, you just do things and just enjoy yourself, and it works out very nicely.
Yeah, and painting's quite cathartic, and it's a nice process when you're painting. You're just thinking about things, and I found it quite relaxing. Hard work, but a good easy renovation to do to a home is get some paint in there.
Yeah,
if you know how to paint. If you don't know how to paint, don't paint your walls. Get someone else to do it. I've seen.
I thought you learned everything off of YouTube. What?
I've seen some walls. You should see the first wall I painted. It was actually back at Mum and Dad's house many years ago when I was a teenager.
I did see it.
Yeah, it's shocking. Yeah. I didn't sand it. I didn't prime it. I think I didn't have the right brush. Anyway, just make sure you know what you're doing when you go to paint. Or give us a call. Okay, so I feel like, is there a step 10? We should round this off. Do you have any final thoughts? Let's land this plane. What's your final thoughts to wrap us up here?
Just note that dreaming about what your home will be is not where you want to start or finish. Work out what you can do and then start to dream about financial freedom, because that's what a home is all about. A home is all about financial freedom. It's security. It's a place where, where you're safe, where you can actually build wealth.
True.
There's so much that takes place there. And if everything's about the dream home, the one thing that's for sure is that the dream home will fall apart over time, and so will the dream. So if we make the dream about financial freedom, that's what leads to a fulfilled life that lasts a lifetime. And honestly, there's just too much pressure in having a dream home and too many problems. So the dream home is one that gives you financial freedom and security. Yep. That's what I'd leave you with.
I love that thought, Archie. That's step 10. I think we can round it off there. I think that's fantastic.
Yep.
That's so good. Well, guys, I hope you enjoyed this discussion. It's a little bit longer today. Next week, we're going to be talking to a buyer's advocate about a more detail about actually buying the home and some things that you need to look out for there. But yeah, I guess just summing up, there's a lot of steps. We might even put this in a PDF to buying a home, but have people on the journey with you, have people in your corner, a great mortgage broker, a great conveyancer, a buyer's advocate, if that's something you need. Have people on that journey with you. It just makes it so much easier. There's a lot of information. If you were overwhelmed listening to this, you're probably going to be overwhelmed doing it. I know I was when we entered into this. It's nothing like the TV ad sold us, but it's worth it. It's fun. It takes work, but everything does, right? And good things come to those who wait. So thanks, Archie. Thank you so much. This is really helpful, I think, to our listeners.
Thanks, Lachlan. Thanks, everyone, for listening. And, please give us some feedback too, because if we've missed anything out, would love to know. Even if you've had a great experience or not a great experience, we'd still love to know.
Yeah, definitely. If you're a real estate agent and you didn't like our comments, we're sorry. We still love you too. If you're a bank listening to this, again, sorry, we love you too. Give us good products to work with and we'll love you even more. Just to wrap this up, I should probably note everything we've discussed today is for education purposes only. This is the disclaimer, guys, and it does not consider your personal financial goals or situations. So if you want advice, don't come to a podcast. We're just laying stuff out here, really just for education purposes only. You need to talk to someone about your financial situation personally. So you want to go to waymakerpodcast.com.au and we can actually connect you with a qualified advisor to look at your situation, or go talk to a qualified advisor that you know and trust. Okay, guys, thanks for listening. We'll see you again next week. Okay, bye.
Bye.